JNH Health, or JNH, went public on October 6th through a reverse takeover of Woodbridge Ventures. Within 8 days of trading, the stock went from a price of 52 cents per share all the way up to $1.68. That represents an increase of 223% over 8 days. In this video, I will break down JNH's business to give you a starting point for your research into this company. Let's do it. What is going on, you guys? My name is Danielle, and here on this channel, we talk about stock market investing. We focus on Canadian growth stocks. Subscribe and hit the notification bell if you're interested in more Canadian growth stocks. And in today's video, we're focusing on another Canadian growth stock, JNH Health. And the format of this video is the following. First, I'll be giving you a company overview and the history. Second, we'll be talking about the market potential for this company. Third, we'll go over their financial statements. And lastly, I'll be giving you my opinion on this company. But first, let me roll a quick intro video to you from JNH Health.
At JNH Health, we believe that we're going to revolutionize healthcare. Revolutionizing healthcare is about providing access to patients where patients traditionally had no access. Wouldn't it be great if we create a standard in healthcare, a standard symbol that you know when you walk in anywhere in the world, you would get consistent quality healthcare, the equivalent of a Canadian healthcare experience, something that we pride ourselves. Canadian healthcare is probably one of the most exportable services that we have in Canada. We will be able not just to export the technology, but actually export the healthcare professionals to train other physicians, collaborate with other international physicians on what a retail healthcare environment looks like. Retail health has been part of our DNA in North America for a long time. It's time to show the world what JNH Health can do.
If you want to watch the rest of that 7-minute video, I've linked it in the description. Now moving on to the company overview. JNH is trying to revolutionize the business of healthcare through building out their clinic network in Canada, as well as exporting Canadian healthcare to the world. The world, before this pandemic, was more connected than ever, and JNH believes that healthcare should be seamless wherever you go. JNH designs, builds, and sets up barrier-free medical and dental clinics. They have also expanded the business to offer technologies such as EMR, telemedicine, and electronic prescriptions. So you can see that JNH is adapting to this changing landscape in healthcare, as well as capitalizing on these new opportunities. And I believe that companies that innovate are the ones that will succeed. As one of the largest healthcare networks in Canada, JNH currently boasts 76 clinics across Canada in 6 provinces, and this is according to the website. They also have 6 clinics in Mexico and just started offering telemedicine services in Mexico on top of the telemedicine services they already offer in Canada. A little bit of history about JNH is that they opened up their first clinic in Walmart in 2006. And ever since then, all their clinics, all 76 in Canada, are actually in Walmart locations. The 6 that they opened in Mexico are between Walmart and Suprema. The synergy between Walmart and JNH is awesome, because customers can browse Walmart while waiting for their appointment and fill up their prescriptions at Walmart pharmacy afterwards. And also, while they're waiting for the prescription at Walmart pharmacies, again, they can continue browsing Walmart. The fact that JNH is a public company now, they have more access to capital, and this will allow them to expand their healthcare network footprint across Canada and in Mexico, as well as the rest of the world. Not only is it just doctors and dentists anymore, they're also starting to include things like RMT, physio, chiro, as well as lab testing. Now that you know a bit more about JNH and what they do, let's talk about the market opportunity. Healthcare spending in Canada alone is around $253.5 billion. In 2017, people who are 65 plus accounted for 17% of the population, but 44% of the healthcare costs. And studies estimate that people who are 65 plus will account for 25% of the population by 2036. So healthcare costs are on the rise. The fact that 4.8 million people don't have regular access to a doctor also pushes for the need of telemedicine. This is more than likely that people live in rural areas and don't have access to a doctor regularly. My opinion is that telehealth will continue to catch on for people who are in the rural areas as well as for the elderly people. Because when you're sick and elderly, the last thing that you really want to do is go out in the winter to your doctors. Rather, if you can just call them from home and get your prescription refilled, then that's the more preferred method. Right now, JNH's partnership with Walmart is still considered small. Walmart currently is in 27 countries and has 11,500 stores. JNH, remember, is only in around 80 of these stores. This business relationship they have with Walmart is their key to international expansion. Near term is to expand into Mexico and continue to expand into Canada. They also have identified that they want to expand into the UK, to China, as well as Central America. So as you can see from these stats, the market opportunity is huge here, and JNH does have a path forward to expand globally. Now that we've finished talking about the opportunity, it's time for us to smash the like button. Okay, now that you've done that, let's move on to the financials. If we look at the balance sheet, their current ratio is below 1, which is a bit of a red flag to me as an investor. But looking at their cash flows, they are cash flow positive. This means that the business is bringing in cash each and every quarter, rather than bleeding cash like the typical tech startup. Their partnerships with Walmart have really reduced the amount of money that they have to spend on sales and advertising. People that regularly go to Walmart will see that there is a health clinic there, and of course, if you're there already, you might as well check it out. And that's how they built up their clientele. Now turning our attention over to revenues. In the previous quarter, revenues increased by 38% to $1.14 million. And on top of that, expenses declined by around 30%, which is quite surprising to me. A 30% reduction in expenses is usually unheard of for a company that's growing at 38%. But this is only one quarter, and maybe there are certain expenses that are very specific to the previous quarter. I've now thrown up on the screen their different streams of revenue. First off, they have licensing fees, which is their largest stream of revenue. After that, they have recruitment fees, retention fees, sales of products, revenues in Mexico, and other revenues. And then they also state here they have payments to physicians, which is a negative revenue. Further down on the income statement, we can see that they had earnings per share of 6 cents. So the company is a profitable company. They're not losing money like CloudMD or WellHealth Technologies. When the reverse takeover was completed, there was a total of around 74 million shares outstanding, and today that puts the company valued at around $124 million with a share price of $1.68. Companies between $50 million and $300 million are usually classified as microcap stocks. So by definition, Jack Nathan Health is a microcap stock. And with that said, let's move on to my opinion. The fact that Jack Nathan Health is a microcap stock means that they have a lot more opportunity to grow. As a microcap stock with a large market opportunity, it's a lot easier for you to grow your revenue because it's a lot easier to increase revenues from 2 million to 4 million in an unsaturated market compared to, let's say, 1 billion to 2 billion. They've already proven that they can scale their clinic business from 1 clinic to 76 clinics. So what's to say that they can't scale their clinics to 11,500, which is the number of Walmarts out there. On top of this, both CloudMD and WellHealth Technologies were recently also microcap stocks and now have advanced into the small cap stock. And we can see that this advancement happened very rapidly. So for Jack Nathan Health here, I expect investor appetite to be huge, especially after seeing the 233% run up in their stock price over an 8-day period. But compared to CloudMD and WellHealth Technologies, their growth is not as impressive at 38%. WellHealth Technologies is at around 40 to 50% and might be even higher in this next quarter, and CloudMD is growing in the triple digits. Jack Nathan Health has some work to do to prove to investors that they can grow exponentially. So definitely keep your eyes peeled for the next earnings report. The next quarter ends on October 31st, so expect to see the earnings report sometime in November or December. The second thing I'd like to highlight is their business plan. And what I really like about their business plan is how they've integrated with Walmart. Walmart is a huge, well-known household name, and millions, if not billions of people shop at a Walmart every single month. This is basically free advertising for Jack Nathan Health, because when customers arrive in the Walmart parking lot, they can see that there's a medical clinic, and if they're interested, they'll go check it out. The fact that JNH has partnered with Walmart for the past 14 years and is continuing to grow their partnership shows that they have some great synergy together. and Walmart enjoys this partnership with JNH. So I have no doubt in my mind that Walmart will continue to allow JNH to expand to other Walmart locations. The fact that JNH is already targeting to expand into Europe as well as Asia, it might not be far off that they somehow manage to squeak into the United States. But if you guys know why that is, then let me know in the comments down below. When looking through JNH, one of the downsides that I see for them right now is that their technology offering is not very strong. Currently, they only have telemedicine as their own technology, and they're bringing in other third-party technology providers into their ecosystem. Unlike CloudMD and WellHealth Technologies that have their own technology, CloudMD has telemedicine just like JNH, as well as mental health, and they also have a remote clinic, which allows customers to enter and perform tests on themselves under the direction of a doctor who is there virtually with them. WellHealth has their own clinics, they also have telemedicine, and on top of that, they're building out their own app store. But right now, it's early days for the health tech industry, so JNH still has a bit of time to continue developing their own technology, which is proprietary to their own clinics. When looking at their financials, there was significant risk there with a current ratio under 1. Right now, with Jack Nathan Health stock popping by about 223% in 8 days, I expect them to present a secondary offering to raise more cash. Because with their IPO, it didn't seem like they actually raised any cash by issuing shares. And this is fairly common with other health tech companies out there, just like CloudMD, WellHealth Technologies, and Newtopia, which actually just announced a secondary offering last week on Thursday and Friday. And typically when these companies are announcing a secondary offering, I've noticed that the stock pops in the next couple of weeks. It may pop on the first day of announcement, but it has shown to continue to climb up in the subsequent weeks. The last thing that I want to say about JNH is that right now there's very limited history. The fact that there was a reverse takeover, there wasn't a full prospectus that was filed. All we know about Jack Nathan Health is from their investor presentation, as well as their unaudited financial statements. So invest with caution here. Personally, my price target for JNH is around $1.20, so I'd be really happy to see it drop back to those levels, but even at $1.68, I may continue averaging in right now, because I think that JNH at a $124 million market cap is still very small and this company has a lot more room to grow. So even though the price is a little bit expensive right now, I think that the company will ultimately grow in the future and that my $1.68 per share, if I were to buy in today, will go up eventually. If you wouldn't mind doing me a favor, let me know in the comments down below whether you own JNH or if you're planning to buy it in the following weeks. Also, what is your price target for JNH? Anyways, that's all I have for today, and if you enjoyed this video, leave a like down below, as well as subscribe and hit the notification bell if you're new to the channel here and love Canadian growth stocks. Keep up the grind and have a great day.